right, welcome to the new daily recap. So what happened today? Where are we in price? We are in a deep discount now of the red range. Because of the CPI news and the core inflation price and core inflation rates, price moved up, impulse up. We took out all these internal highs. We took out previous weekly high. We took out previous daily high. So like a lot of liquidity to the upside is taken now. We can actually clean this up. Just do it. Do it like this. So internal range liquidity is taken now. What can we expect now? We can expect price to turn around. We took the internal highs, we took previous daily highs, previous weekly highs, everything. So we can expect price now to turn bearish. What helps with this is because we have this purple range going on and we have a new spike over here. Usually after, I can't show you my journal right now, but usually after CPI news or core inflation news, we get a spike to the upside and that wasn't priced in. So that's why we have the spike. If the news is as expected, we won't have big news moves, but if the news is higher or lower than expected, we get the big price moves because they have to reprice it in. And usually after that, we can see price takes one side of a lot of liquidity and then breaks down to the other side, unless like the news affects for the long term. But this is like short-term inflation rates and the CPI. So now we can expect price to come down. And we can expect price to take out these lows, probably inducing some buyers over here, maybe, and then turn bearish. Then this is our most recent bullish range we had. Then we broke bullish internal, so we can now change that internal range liquidity. Actually, let's keep it like that. We have this low, high, low, lower, high, low, low, bullish break. Not low, low, but we get the bullish break anyway. So internal, like we have this purple range that's bullish. We have internal range that's bullish, and then we have the internal of the internal range, which is bullish as well. Going down lower, we can see the price is building up this liquidity to the downside. So where we reacted from this last bullish range. That's a bit messy, my bad. Actually, now we can like clean up a lot. I'm gonna do that after. So coming into this morning, we had this impulse down. That's created yesterday during New York and late New York. We have then this bearish break again. We have internal range liquidity. Then we have although it's like bearish because it's bullish and this is like our bullish range from low up to high. We can still like see this 50-minute POI and we can see the price took internal range liquidity, and based on the high time frame, we see the slowdown and not very impulsive. So we can maybe expect price to turn around and not took the highs, but yeah, it happened anyway. So based on that and the thought process of yes, we can go lower, we come into London. What can we see in London? You can see price forming early sellers taking out Asia high. Then we have our first like move to the upside, early sellers move to the upside, discount, higher high, bearish break. So this is our first bearish break. Then over here, entry block. It's a strong entry block as well because we have the early sellers, we have the bearish break, we have the disruption of internal highs. So this is like a strong order block, and here we have our first losing trade. We're selling in minus 1% because why? We get another set of early sellers, which is this. And then we have a bearish break again. We have a 50-minute POI. We have the last place of order flow taken out, but with the disruption of highs first. So actually we have our type 2 entry drill over here, where we react price gets early sellers, then takes out or reacts from the last place of bullish order flow, then takes out the last place of bullish order flow. And by doing so, by taking out the last place of bullish order flow, we take out these internal highs, and then we short from this order block. So we have one losing trade over here, and this is our winning trade. 2.1 this block. And with the type 2 entry drill, we can actually target a 1 to 10. And as you can see, it plays out, but I think I gave too much reading room. like this, just like that. And once the 10 plays out over here, there you go. Then coming into London, or the end of London, price engineers liquidity to the downside, fails to take out Asia lows. Then we get the early buyer move. Early buyers. Then we got structure forming over here. And we got some minor breaks over here, but we first have to take out our early sellers. Then we got our break of structure over here. We have our extreme blocks, which are already mitigated, but we can take this one, put the tucker stops below the lows. Oh, POI. So early buyers, more sets of early buyers. Building up equals to the upside. And then we have a bullish break. And we can long from the last mitigated order block. 21. There we go. Put tucker stops below the lows. Why? Because it's not a clean order block, and this is the last place from buyers to sellers, sellers to buyers. So 4.1, 4.6. And that's a long trade. 1 to 5 gets hit just before the news. Or during the news, not before the news. And then even if we miss this trade, we can see that, okay, we had all the confluences over here. And we have this bullish break again. And then we can take the continuation trade. So even if you miss the first one, you can enter again from the most extreme and mitigate block. For the cleanest one. Get liquidity going up just before block. And you have your continuation trade as well, following the order flow, and still same confluences, but just not the early buyers to sellers, because you can look now for direct entry. Put it on there. This is 1.6, 2.1, and that's an easy trade. Holy shit. 1 to 5 over here. And even after that, you get another. So we come back here. Over here. This is the last trade I would take, because then we have one move up, second move up. This is our third move up. So from here, we can take this long to 4, 5 is decent. And we enter, can put ourselves 2.9 like this, or again, tuck it below the low. So that's like a 3.7 pip stop loss. And again, before the news, we hit 1 to 5. So we got like 2 confluence trades, type 2 entry actually, which we don't see a lot, maybe twice, 3, 4 times a month. And we got the longs over here, one with the confluences and 2 continuation trades. Then coming into the news, we take out all this. Actually, we can, like, after Asia lows, where do we react from? Because this is all mitigated. On the 5-minute, let's see, there's probably a 5-minute block. This is our 5-minute block. Over here, we got one as well, but it reacted from this 5-minute block. Maybe there's a 30-minute block or something. Yeah, 30-minute fair value gap. So we react from this over here. Schematic. And it's a 1-hour block, probably. Yeah, 1-hour block. Or 1 hour fair value gap as well. Okay. Take your previous New York highs, previous daily highs, previous London highs, more New York highs, previous weekly highs, internal range liquidity coming up. After news, what can we see? We tap into the into the what's it called? The daily PY. We get our first early sellers over here. Early sellers. And we get our bearish break structure. And oh, we actually create equals. But what's a hard one? So I want to catch this trade maybe from a 2-minute block. Non-mirror. So taking the 2-minute block, we have this unmitigated one. PY would have been a miss, and it's now, you can see it's going liquidity to the upside. So it might come into the future. We can like see price come into there, then continue short. Order flow wise, what can we see? And yes, there's our trade, I think. So early sellers confidences are there, but just not the trade, because okay, we come to the discount, bearish break structure again, and then we can look for the continuation trade, but everything is mitigated, so there's no continuation trade. Or at least not for me, because there are people that tend to use this wick. I don't. If you take the wick, then this is your short. Confluences at the confluences, then a bearish break again. So we don't look for the confluences again. We just look for the continuation trade. 4.7, 5.2, 5.5, 1 to 5 before taking out the structure. So yeah, what a day! Look at these opportunities. Holy shit! What the fuck? That's insane. One trade opportunity. Is there another one here? Bearish break. Not really. Bearish break again. And then no, because then you look for your longs because you took Asian lows. So yeah. 1, 2. If missed, 2, 3. So we got like 4 trade opportunities over here. And 1 trade opportunity that fits our plan over here. Damn. 3-minute block maybe? Curious now. 3-minute block with breathing room. No. All right. So 5 trades really that fit our plan. Where's my phone? That's mad. Oh, we'll take a picture of it. And now we can expect price to like take out these lows. Here come into this one because this is our new. Oh, I'm gonna clean it up with you guys. Yeah. Let's take a look at this. This can go. Don't really care about this one anymore. We can leave that on. We can actually extend this one. Take this one off. We'll take this one off later. And we have our new range from low up to this high, taking out the internal range liquidity. So now we can expect bearish price movements and targeting the liquidity to the downside, and maybe either. So oh, we didn't reach discount yet on the red one, so we can extend that range. Let's see, but it would be completely sure. I think it's this one, a little bit higher. So we just about missed discount. So yeah, we can expect to extend the red range, maybe see price. Oh, we can maybe see price come deeper into that one, to this one, then continue even bullish and take out the bullish the high time frame red range. So yeah, this was daily recap. Enjoy.